So we have got a big day here, guys. With oh, I just got some sound behind me now. Hey, I didn't do that, guys. That was put upon me. Oh, wait a second. Today. It's my early birthday. That's awesome. James Chandler, thank you guys. Appreciate that. That's an awesome surprise. That actually completely threw me off. Tomorrow is my birthday. Yeah, thank you guys. I appreciate that. So NFP is coming around the corner. We've got last numbers were really pretty rough, right? In terms of jobs added. The hurricane event that took place in the Southeast United States hurt the story here for the numbers reported in November representing October's NFP. By the way, this is going to drive me crazy. These dates need to show up a little bit better, so let's do that. There we go. Okay, so this time around, what are we forecasting? Well, I saw it yesterday. I think it's 225. No, 218,000 jobs are forecasted to be added to the U.S. economy. That would be a bit of a bounce back from, you're talking about a number that looks like around here. That's the forecast, right? So forecast this time around is a bounce back in jobs added, which would make sense. But the question is, are they going to beat, miss, or kind of hit those numbers exactly? Because here's the thing. If you guys want to know what's going to cause a big spike in NFP or in price for many charts, well, if you get a significant beat in jobs add, let's say we get 300K, right? If you get 300K in jobs added, what does that do to the markets? It does a whole lot. The stock market's the hardest to gauge here, in my opinion, but the dollar is the easiest. If you get a really solid jobs number added, likely the dollar goes higher. If you get a miss from expectations, what happens? Well, the dollar index probably drops. Now, from that, we can extrapolate what that would likely do to other charts as well. If you get a stronger dollar, it probably pushes gold lower. Stability in the jobs market is not necessarily a very bullish case for gold, right? Because gold kind of thrives off of a weaker dollar and economic uncertainty. So if you're a gold bull, you actually want, and I say that because I know a lot of people in the audience trade a lot of gold, right? So if we get a miss in NFP, that's what you probably want if you're a gold bull. Now, how do we actually trade this and which way is it going to go? We don't know. We do not know. And this is something that I think is really important to reiterate. We're just like everybody else. We're waiting for the numbers to see what they come out to be. We don't know what NFP is going to come out. You're going to see people in the comment section periodically, all over social media. You're going to see people saying, oh, gold's going to go up. Gold's going to go down, right? Don't listen to that. That is noise. We do not know what the numbers are going to be. The better way to approach it, in my view, is that if you get a rock solid report, trade the aftermath. So let's say we're looking at DXY, right? And let's say that the dollar index gets a big bump on NFP. Well, I'd be looking for opportunities to join that move on a pullback in the coming hours or days. So that's the way I like to trade an NFP report, is don't necessarily try and trade the spike and get all fancy, right? You're going to lose to the algos. They have a million% faster machines and internet connections and data feeds that will get that data out before you. You're not going to be able to trade the spike and make a ton of money easily. I wish it was that easy. We'd all be sitting on the beach right now. It's difficult, right? To try and outpace Wall Street's machines that can instantly have the data in front of it, trade everything on algorithmic. You're not going to be able to trade this spike and make money long term. In my opinion, I think that that's really difficult to do. I've never seen somebody do that. The only people I know who are doing that are, Wall Street, and they have millions and millions of dollars invested into building the best machinery, the fastest computers. So we're not going to win on speed. What are we going to win on? Well, we're going to win on analysis. What does this actually mean? What could this entail for the coming weeks in the dollar? What about the stock market? I think the stock market wants to see numbers around expectations. They don't want to see too hot because that would push back the rate cut story. And they don't want to see too cool because that would bring up fears about how strong this economy really is, right? So the stock market, in my view, wants to see, if you're looking at SPY, if you're looking at, these charts, also let me go ahead and get my my 4-chart view going. The stock market wants to see, in my opinion, numbers close to forecast. They don't want to see too far. They don't want to see not too hot, not too cold. Gold wants to see cool jobs data, right? Dollar index wants to see hot jobs data to go up. So we're going to see how all of that shapes up here, guys. We got about 30 seconds. And we're going to see if we get a follow-through candle, a whip candle back and forth. We do not know. Again, the numbers will give us a better idea as to whether or not this candle has the chance to follow through. But please be careful trading the spike. I know a lot of people do that. So, you know, you're playing with fire. Be careful. Let's go to our breaking news. All right, let's see what the jobs data brings us here this morning, guys. We've got the numbers any second now. All right, and the numbers should be dropping here momentarily. Looks like the dollar index just took out the lows. Gold slightly higher. I'm going to guess that that's, again, there's a lot of reported numbers coming out here. All right, so we got about expectations, 227K. So that's a decent jobs print. Unemployment rate did also go up. So this is going to be right off the bat, going to say it's kind of a mixed report. So you had unemployment rate, right? People out there trying to get jobs slightly couldn't get as many jobs as expected. So 4.1 ticked up to 4.2% unemployment rate. At the same time, the number of jobs added, 218 was what we were forecasting for. We got 227. So slight beat on that front, slight miss on the unemployment rate. So a bit of a mixed picture on that front, but at the same time, we had average hourly earnings go up. This is arguably a good thing for the consumer base, right? People getting wages increased. The only thing you have to be careful about is that there's a story here, right? With the whole Donald Trump deportation story, right? If that happens, that's something else to think about that could be very inflationary. The reason I bring that up is because if wage growth is going up now, imagine when you potentially remove a lot of people's jobs who are, you know, often worked by immigrants. If you remove them from the picture, those jobs have to get filled by Americans or by people, right? So the labor supply shortage could be inflationary too. So it's something to think about. I do think that one of the big themes for 2025 is going to be watch that inflation number real quick. You got tariff concerns that could be inflationary, and you've got actually the immigration stuff, the deportation stuff, that if that does become a big story of next year, could actually be a bit of an inflation problem. As you remove people who work some of those jobs, people have to fill those jobs, and then the supply demand of labor can actually be inflationary. So anyways, what do we have here? So we have overall a slight upbeat number on the number of jobs added and a slight miss on unemployment rate and a slight uptick in this. Oh, and they also revised the previous jobs number up. So jobs data overall, pretty decent. 4.2% compared to 4.1. Yeah, it's a slight tick up. It's not the end of the world, but this revision here brings that 12,000. We just tripled last month's numbers at 12K, tripled it up to 36K, and 227 compared to 218. Wage growth is still intact. You know, I think the stock market's going to find a way to rally on everything right now, but that's arguably a pretty decent story for stocks. You've got jobs coming in pretty good, right? So jobs coming in pretty good. You've got unemployment rate still historically very low. And then people are getting wage increases. Dollar index is down, which is interesting because, of course, that unemployment rate did tick higher. But I don't see a massive downside move on the dollar index at this time. You know, if we take a look at the 1 hour chart, it is a move lower here, but that's not a ginormous move. You know, big NFP numbers can cause that kind of move. So this is a move. We'll see if it continues to the downside, but wage growth up, unemployment rate, you're a little bit of a mixed story for the dollar index, but seems the market is taking a little bit more negative. Here's some current setups that I'm looking at in the market. Let's go ahead and take out neutral readings, and this is what I've got. So I'm still bullish on, this is pretty much my watch list currently. Look at that, dollar yen coming in bearish now. Actually going to watch that close. Current setups for me are looking at possible sell setups on some yen crosses, and then at the same time looking at the Nikkei, the Dow Jones, the NASDAQ, copper, and Bitcoin all on the bullish side, at least for short-term trades. So I like the story here. I'm going to look at some of these charts here really quickly. We'll do some watch list stuff. Following those jobs numbers, let's take a look, first of all, at some of the indices. So the NASDAQ, again, pumping higher here. Not really too interested at these current levels, but if you do get some pullbacks, I may be interested in possibly buying some interesting setups there with a stop loss, of course. Dow Jones up and away. Russell still continuing to overall move higher. Had a little bit of a sell-off here recently. I was keeping an eye on that. I liked this idea of a bigger pullback into this region for possible continuation plays. So watching the Russell, watching the indices as a whole. The Nikkei also not loving this chart, but would like to see a break one way or the other. So watching the Nikkei on that front. Let's see what else we have. I'm long the Chinese stock market, which has actually come back from the dead, it looks like a little bit here. Let's see, MCHI. Actually, you're not going to be able to see that position there because I have a covered call on it, but we can pull it up on the brokerage account really quick. Give me 1 second. Let's see how our MCHI is doing. I mean, it's in the green now. Let's see. But this, yeah, so we're slightly in the green now on the MCHI position. I also sold calls on that one, so we'll see how that plays out. But yeah, nice little pop on Chinese stocks. I am long on Chinese stocks. It's been kind of a boring one to watch, but it's a small position for me. And then Bitcoin. I already have a position on Bitcoin, and it was a weird one yesterday. So we had this huge dip, flew back. So this is going to be kind of confusing to explain. I'm still long IBIT. I'm in a drawdown here of $690 at this time. I'm still in the trade, even though the price went past my stop loss, because I trade an ETF variation of Bitcoin. This is kind of confusing, but because the market closes, it's not a 24/7 market like regular spot Bitcoin, right? The reason that I'm still in the trade is because this weird gap, movement happened like after the closing bell on, past New York session. So I'm actually still in the trade, which is a bit weird. That's part of the thing about ETFs, right? With ETFs, when you trade them, there's gaps. So what happened is that this moved down. You can see it didn't hit my stop loss technically on the open market. It hit it during overnight trading. So it's kind of a weird variation or component to trading ETFs. Sometimes it really helps me and sometimes it really hurts me. In this case, it helped me, but there was a time on QQQ I was long, market gapped way lower than my stop, took me out for a big loss. It sucked, but you give some and you give some back. That's the thing about trading ETFs. People ask me, well, why don't you just trade futures? And the reason I like trading ETFs is because I can oftentimes do things with options that I can't do as easily in other places. I know you can trade futures options, but I've always traded ETFs. I like the way the share concept works really well for me. It makes a lot of sense. I can manage risk very well with them. So the downside, though, is that gaps can be a little bit annoying. But in this case, it might have saved me. So if the market comes back for Bitcoin, I'll still be in the trade. Yeah, no, and I think that when you look at the Fed Watch tool here, we can go take a look at the 18th of December, and you can see that it bumped up actually quite a bit here to 89% probability, at least according to Fed Funds Futures. That's the way this tool calculates it. Basically, is it looks at the futures trading activity of bond market stuff, and it gives us a calculated probability. So 89.3% chance that we do see a 25 basis point cut. The question I think then becomes, you look at December, what's the chance that we cut in December? It's interesting. They're actually kind of forecasting that we hold rates, but if between now and then you get a really weak another jobs report or something like that. PMIs come in weak, or this could actually change to go further. But it's hard for me, Kenzo, right now to really have any sort of bearish outlook on this market. You're talking about a Fed that has a really strong economy right now. We heard the word used by Jerome Powell in his recent commentary was that the US economy is quote unquote exceptional, right? So you have
Mm.
exceptional from the Federal Reserve chairman. That's pretty intense. So they are surprised, even at the Fed level, at the outperformance of the US economy. The strength of the economy seems to be surprising everyone. And so when we look at that, we say, okay, so the Fed has a strong economy and we're still not necessarily high on interest rates, but higher than we have been recently. The Fed has room to cut rates if they need to. Businesses are doing well. The consumer seems to be doing okay. The difficulty for me in this is it's really hard to find any bearish case at this moment. And maybe that's not a bad thing. Maybe it just means you stay convicted long until further notice. What would, and this is where my question comes in, what would get you to change your view on the indices? I know both of us are pretty bullish on the indices. It's not a big bearish case that we can see right now. In 2025, let's say, what are you going to look for on the fundamental side that would change your outlook on the indices, maybe make you more neutral or even bearish?
I think at the moment, the market was just happy because of Trump. Let's say, as we always repeat, it's pro-business. But I think sometimes the market overdoes that, and the market is just fly and non-stop. I think one way or another, we will still get that a reversal here and there. But when the economy is doing good, obviously, even the indices will actually perform very well. They might not really perform as the way we see Nasdaq now, but I think slowly we can get those uptrends going further. But what I know is it's just not going to be as easy as we think. Now things are looking good, which is actually nice, but we will get some reversals along the way. We will get some reversals, but I don't really see it. Even if we have those reversals, I don't really see that as a very long bearish trends and stuff like that. I think companies are performing very well. Slowly, the rates will go down, even if maybe they will pause along the way, but it's way much better than 6 months ago. So actually, the environment is good for business. And yeah, I think we will see some nice push to the upside.
Yeah, I mean, that's the thing, is it's just hard to fight what is a very strong bull market at this time that has some pretty good bases. Is the market expensive? Yes. It's hard to deny that the market itself is considered expensive on a PE ratio basis. It is, and a sentiment basis, right? Everybody is bullish. Everybody is feeling strong about the market right now. The Fed itself seems to be pretty strong on the economy and pretty optimistic about it. So the thing is, what do you do in that scenario? Because I already know a lot of listeners are probably like, well, that makes me nervous, because if everybody's bullish, what happens if it changes? What happens if something breaks? And the answer is, for me at least, and I'd love to get your thoughts as well, is you can't time when something's going to sour very easily in the stock market. It's kind of one of those things. Market has a good outlook, you stay with it, but then you prepare, you be aware of what could change that story. For me, what could change that story would be a strong uptick in inflation. If we take a look at, for example, let's pull up just inflation data for a moment. Inflation data in the US has been trending down and then sideways, trending down, and now we've had at least one bump up in inflation. If we see that become a trend where we bump up, some of the criticisms or uncertainties about Donald Trump is that some of his policies could be inflationary. And, even if you like or dislike him, it doesn't, if we're here to make money, the idea is simply this concept of, if tariffs do cause inflation, if deportations in the United States start to really ramp up, and that leaves a hole in the labor market supply, which could be inflationary as well. There are these concerns. The thing is, in actual terms, I don't make a move off of these things just because I feel like they might do something, right? I have to wait for them to actually start doing something to really change my opinion. Would you agree, or do you think being more preemptive is better?
No, I think, I actually agree with you. Sometimes, actually, we just have to let whatever that it's about to happen, because as we do this every day, as you do your analysis every day, as you follow the news, obviously you will see the changes happening. It's not like maybe you're just going to be caught along the way. So with the tariffs with Trump, I don't think he will implement everything at once. Some of the things, I think maybe they will correct him, I think. But I think that it's actually an approach to say that people have to, or businesses have to invest in the USA, not really like 100% tariffs. If it's like that, I think it's also not going to be good for the US within his period, actually. So I don't think maybe he will allow that. But I think the best way is to just follow whatever that you see on the market. As you follow the market structure, you have the strategy. I think that is going to be way more important, and understanding fundamental that can also help, because next month, which is January, those first month, January, Feb, I think it's going to be tricky for the market also. I think it's going to be entertaining to see what investors expect, because every statement from that is going to be very important, and it's going to have a direct impact on the market. So yeah, we just have to wait and see.
I really hope there's no blown accounts after the dollar move today. It was quite aggressive, move to the downside. Although NFP seems to be quite supportive, obviously the wages as well. So it's bouncing around in terms of sentiment. I would say it's quite mixed. So I'm sitting on the same side as I think Nick said. He viewed it as quite mixed as well. So Euro is actually moving down off of this news. We had an initial spike, so obviously counter to the dollar. As we saw a weaker dollar, we saw a stronger euro. Same thing here with the British pound. Now we're seeing a reversal of that, which is perfect for me. So I can't show you fully because my MetaTrader has decided not to work, but you can see generally what's going on here. I promise it is real, it's just frozen. So there's that. I'm also in Euro Yen, which is very similar. So this isn't the real trade positioning, but because I've DCA'd, this is my average price, which is why it's marked up here. There is no stop loss. But yeah, you can see my take profit is just around this level here where my alert is set at 15572. So I'm still very confident in saying euro dollar still has a lot of room to go to the downside. So I'm just holding on to this one, really scaled in again right after we had the news release on the spike. Obviously took another short position, so quite happy to hold this one really as long as it needs. I'd ideally love to get out ASAP just so I can flatten the portfolio a little bit before Christmas, but if I have to hold it, I will. Watchmen, it's a slow Friday as usual. I don't know what charts you're watching, but it's been pretty volatile for me. I mean, it's been obviously slow leading into the news, but a lot of movement very quickly then. Liban, hello. Wonga, hello. Gold, yeah, I've not looked at gold yet, actually. Let's see what's happened. Still inside its range, actually. Obviously quite an aggressive move down on the H1, but if we're looking at the broader landscape for gold on sort of the H4, there is nothing here. It's still sideways moving. So there is still nothing to do on gold, in my opinion. You know, I've said it for the past couple of days, but there's no catalyst to buy. There's no escalations in sort of the world tensions, and there's again no reason to sell really. So I'm sat on the sidelines on gold. Probably won't really touch that for the next 1 to 2 months, obviously, unless we do get that catalyst, which I kind of hope we don't, because also that's not good for humanitarian purposes. Johnny, hello. Cedric, hello. Non-scripted. The dollar went down. So what we had was, let me pull up the news here. Let me scroll over here. So we had NFP come out positive. So this was 227k. Previous was 12k. I think this was revised actually to 34. I think consensus and forecast was beaten. So pretty good performance in NFP. The issue is unemployment ticked up, which isn't good. So it's kind of, again, mixed, as I said earlier, which leads people to start pricing in even more than it already was, a 25 basis point cut later this month. So if we, actually, let me just change this though. If we have a look at the CME FedWatch tool, so this will tell us what the probabilities are. So yeah, you can see it's increased massively. So previously, or yesterday, it was a 29% probability of a rate hold. It's now decreased to 12%, and the rate cut probability is increased to 87.3%. So that's why the dollar's down on mixed data, because it's not necessarily great if we're looking at it in terms of Fed decisions. Yeah, Wonga, exactly. It'll be people repositioning now to account for a rate cut. It's basically already priced in. I think, there's that small sort of 20% probability that sort of wasn't priced in. But I guess now that is going to happen. Although, having said that, I'm quite happy to say that I'm bullish on the dollar. I'm still looking really to retarget this 107. And then after this, I'm looking at the 110. Now, I may be a little bit biased here. Maybe I could be completely wrong, which, maybe I am. But yeah, for now, the way I see it, there is nothing really to stop the dollar heading there other than a rate cut. But again, the rate cut's expected. It's not really a huge shock. Why is gold down? Because the dollar has reversed. Essentially, obviously, we had a downside move on the dollar, which is beneficial for gold, and now we've sort of reversed that whole move. So gold will also have corrected. With a rate cut, we should see gold go up again. No, not necessarily. So with rate cuts, it's not a case of it's not like NFP. So it's not a case of we get the rate decision on the day and then the market reacts, because obviously with a NFP or unemployment, we don't really know what the release is going to be. We have a guess, but we don't know at the end of the day. So it could come out as a massive shock. Whereas with rate decisions, it's generally very understood what's going to happen at least a couple of weeks before. So it's not quite the same. So if we actually do get the 25 basis point cut, I wouldn't expect us to have a huge bearish effect on the dollar. Pound CAD. I was actually stopped out of my Canadian dollar positions this morning. Closed pound CAD for about 0.9, about 0.9% loss. But you can see here, closed out around these highs here. And then I took a full loss on Euro CAD as well. So it's not been a great day. I also had to close one of my Euro dollar shorts as well for a loss, just to minimize risk and move my average price up. But yeah, I think this position is invalid now anyway. Oil's moved down. Actually, there was some news that came out. OPEC Plus delays oil output hike until April. It's extended its cuts into 2026. So that's actually quite supportive of oil, but yeah, I'm just not really a huge lover of the oil market right now. In terms of bullish or bearish, I don't really have either way. So yeah, I'm kind of staying out of this. The trend in terms of moving average is about to turn bullish. We've got an RSI overbought. Technicals are very range bound over here. So yeah, honestly, don't really have an opinion on this market anymore. If yen goes up, reverse carry trade will impact NASDAQ like August. No, Russ, that's not quite the same idea. So the reason we had such a big reaction in August was because it was essentially a panic sale. So what we had was a intervention by the yen. I'm fairly sure during that time we also had pretty bad news for the dollar. So it was a case of just sell sell your holdings in those assets such as S&P, the Nikkei, the Nasdaq, and that's what caused the sort of brief flash crash, is what I like to call it. But yeah, just because the yen's moving up, it doesn't necessarily mean the Nasdaq's going to start moving down. They're not correlated really like that. Dollar yen, dollar Swiss, euro yen. Yeah, I'll get to the charts in a second. I'm just catching up with the chat. Any arguments for bearish dollar? You could say that the data for the dollar hasn't been as supportive as it was. So during, let me go here. So during this move on the dollar, there was essentially no bad data. It was all very, very good, and it was very supportive of dollar longs. However, recently, since this move, it's been neutral relatively. So you could say that maybe the labor market isn't quite as hot as what we were expecting or what we may have thought it could be. And obviously we now could be are pricing in the final bits of a rate cut in this month. But again, overall, I do still stand bullish. Okay, so let's have a look at dollar yen. So for a long time, well, I say a long time, for the past sort of 1 to 2 weeks, I've had more of a bearish stance on dollar yen, but I've been very opposed to actually selling it because the dollar's been so strong, and I also expect a strong yen. And obviously the point of trading, if we get down to the fundamental of what trading is, you buy strong, sell weak, and vice versa. And in my opinion, the dollar and the yen are both pretty strong. So it's not a market I would like to buy, and it's not one I would like to sell. Although, again, I do more stand towards the sell side of this market. So I would be looking possibly targets down here, sort of the previous support levels. Maybe somewhere around here as well. We've got, there we go. We've got the EMAs have turned bearish, but yeah, I wouldn't. Yeah, again, it's not a market for me. But overall, I'm still bearish. Similar to euro yen as well, which I'm currently in the short positions here.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.